Y'all, it is early. It ain't that early. I could have been went live, but you have to get yourself together and stuff. Had to, you know, wake up fully, basically. But we want to talk about how life insurance can be an asset. I ain't gonna lie, y'all. It's cold. I'm in the garage. Hopefully, y'all can hear me. I'm gonna just speak a little louder. We're gonna talk about assets versus liabilities. But first, we're going to break it down and let y'all get an understanding of these four things right here. You have income. Income is the money that's coming in. So most people get their income from a job, right? Expenses, right? Expenses would be, I'm going to say, expenses would be something like uh, bills, or like food, clothes. Um, a home, a car. Now, these two could also fall under liabilities. Liabilities are anything. Liabilities it's basically damn near the same thing as expense in a sense. It's what take money from you. So a liability could be kids, elderly, pets, irresponsible people, house, home, car. Um, and then an asset could be anything that brings money. So let's say, um, stocks, real estate, um, business, investments. Okay. You got so the income, right? We talking about any form of earned income, basically. I feel like my camera foggy. Hold on. Okay. So any form of earned income for the most part, right? So we talking about how basically we need to try to keep more money, meaning like this basically how the typical teenage first time having a job and getting into the world, this how it's gonna probably look for them, right? It's gonna go income, expenses, gone. Over here, that's where that shit gone. So most people they go to work, they go get paid, they go have bills, food, clothes, house, car, whatever, and then that shit gonna be gone. Hold on. I'm gonna just write gone over here because that mean that shit is gone. Okay. So that's that's bad money management. That's bad because they ain't got no asset. They don't got no liabilities, but they ain't got no assets, right? Right. Now, as they grow older, as they go from their young age to an older age, it's gonna go like this. It's gonna go job, income, income expenses, expenses, liabilities, and then gone. And that's with them making more money. So when you hear more money, more problems, it be the people who don't know how to handle their money in the first place. It's gonna go from in their pockets, out their pockets, to even more out their pockets. And now that shit is gone. Right? Now, the people that typically living like this, they fall under the E and S on the cash quadrant. So they the employees and the self-employed. They the ones who typically go be income, expenses, liabilities, right? Now, the ones that be on the more business side, they ain't gonna even have no job. First of all, let's just get that part out of the way. Right? Business. Investor. Cause that's what they gonna be. And they shit gonna look like this. The business people and the investors go, they gonna be like, the business go pay for expenses, but ultimately, them expenses go make assets, and then it's gonna just go in a circle. Might throw a little bit of this in the family and stuff, but either way it go, they go work around in this area. As long as they in this little loop, guess what? It ain't gonna never be gone. So clearly, you gonna have expenses, you gonna have liabilities, but do you have assets? Assets is gonna be what's keeping that money coming, keeping that money flowing. You feel me? Liabilities go take it away, right? It's gonna take it away. So of course it's gonna be some going out. Some of it gonna go out, but how much gonna stay in though? That's the question. How much you keeping? And losing it, we all gonna lose some money. We all gonna lose some money. But who gonna keep the most money though? Who gonna keep the most money? That's what you gotta ask yourself. And that's the challenge of this world, man. Seeing who gonna keep the most money. But that's my little, I guess you could say, take on that. Assets versus liabilities. You wanna have more of this going on so that it could go out, in, out like this. And then, yeah, once you have kids and all that, it'll go a little bit like this. Some will go out, but you'll still have that amount that stays. You feel what I'm saying? And I forgot to tell y'all the biggest thing, right? The biggest thing is this. You can put life insurance in both of these. Life insurance will be an expense, but an asset at the same time. because what makes it an expense is the premium you pay each month. But what makes it an asset is if you die, your family get the death benefit, and if you live, y'all get the money that was put into the investments. So it's a win-win. So it might be an expense, but it's not a bad one. It's one that's gonna definitely keep you going. Cause like if that's the case, your car a bad expense and your home a bad expense. Because at the end of the day, now one of them ain't helping you make no money. It might help you get to the money. It might help you have a place to sleep and stuff. After you go get you some money, but is it really bringing you money? No. Life insurance ultimately gonna bring you money in some way, shape, form, or fashion. So, yeah, that's all I gotta say about that, y'all. Hopefully, y'all understanding what I'm putting down, cause it's for y'all. And I'm out, man. Everybody have a